Today's conversation is sponsored by First Generation Capital Partners. If you're an accredited investor and you want to find out more about investment opportunities, go to firstgencp.com/invest.
Really, this is imperative. If you choose another market, another part of the country, it's incumbent upon you to learn about that market.
Yeah.
Not so much like you live there, but you do need to know where the submarkets are, which submarkets are thriving around a given metro area, and where the paths to progress are, where the highways are.
You're listening to the Going Long podcast with Billy Keels, the #1 podcast for long-distance real asset investing.
Welcome to the Going Long podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. And yes, I am your host, Billy Keels, and I am really, really excited to welcome you back for today's conversation because it's awesome. It's really, really awesome. But before we get to the conversation, just a couple of things. And I know you all, I talk about this all the time, but just really, really quickly. If you have not yet had an opportunity to leave an honest written review as well as a rating, join the party because everybody else is doing it and it's fantastic. And as a result, one of the main reasons that we continue to move up the charts is thanks to you and you leaving your honest written reviews. Also, it's something that I read every single one of them because we're going to continue to make this the best podcast for you. By you providing your input, it helps us to make this podcast even more amazing. So that also, a lot of you continue to ask like all the podcasts, because we're over like 210 at this point, which is just amazing. You want to find an old podcast, you want to see, listen, you want to maybe go to episode 100 or 200 or whatever. Those are my two personal favorites, of course. The way to do that is to go to billykeels.com. When you get there, all you need to do is check out the podcast tab. And you can listen to every single podcast. You can watch every single podcast. You can get the show notes, all that kind of stuff. It's all there. And then lastly, those of you who are accredited investors, and we've talked about this before, you've heard about it already. If you want to understand more about how you can help to continue to keep more of your money and also connect with other accredited investors, send me an email, aiclub@billykeels.com. Once again, that's aiclub@billykeels.com. And listen, as for today's conversation, we've got an amazing guest who's been doing and in the real estate game for a while. He's within the software industry. He is now doing this full time. He's going to tell you about how he went from investing in his backyard to now doing long distance. Amazing, amazing guest, John Todderud. And we'll get to that just after this. Are you a busy, high-paid professional, someone who's made $200,000 the previous 2 years and also expected to earn $200,000 this year? Or maybe as a couple, you filed jointly and you've earned $300,000 the previous 2 years and also expected to earn $300,000 together this year. Or maybe yourself or as a couple, you have $1 million in net worth, not including your home. Well, if you meet any of those criteria, then the IRS considers you to be someone who is an accredited investor. And so that probably means you're a top producing software sales executive, or maybe you're a highly paid consultant. Maybe you're a lawyer. Maybe you're a doctor or a business owner. You may even work for a professional sports franchise. Well, one way or the other, you've done a lot of really hard work to get to where you are. You've done 100% of the work. And nowadays you're continuing to get crushed by taxes. And that means you're only bringing home 50% of the reward. If you're tired of doing this over and over and you're looking for a solution to start to keep more of your money, you can go to firstgencp.com/invest so that you can start to keep more of your money, which means that you can start to have the freedom to choose what you want to do, when you want to do it, with whom you want to do it. So once again, go to firstgencp.com/invest to see how we can start to help you today. Once again, that's firstgencp.com/invest. If you want to know how 3 decades in the real estate investing game can lead to massive advantages in long distance investing success, then guess what? Today's a conversation you're going to want to listen to until the very last word. You know why? Because today's guest, our special guest today, started in his professional career in the software industry, in the aerospace industry specifically. He's also had various different roles in various industries with a strong software background. He's also acted as a consultant and a systems analyst. He has 2 boys, and he is also part of the Northwest Entrepreneurs Network. He's a troop treasurer as well as scout leader. He is also the owner, and he's owned and managed his own investment home since 1984. He's a business owner, syndicator, investor, and the head of Cardinal Oak Investments. It gives me great pleasure to welcome to today's conversation, Mr. John Todderud. John, welcome to the show.
Thank you, Billy. Appreciate the invitation. Nice to be here. And great to share my experiences and wonderful to catch up with you again.
Oh man, it makes my heart happy just to be able to see you again. And like, because we met many years ago, and to have you here as a guest, the conversations we've had in the past, I know you're going to add so much value to the entire Going Long family. And I just want to get right into the conversation. Or I know we'll talk afterwards, but here we go.
Let's do that.
Yeah, cool. So as you know, John, I'm going to ask you at least 5 questions. I'm going to ask you 2 in the beginning. I'm going to ask you 3 at the end and in the middle. I'm probably going to ask you a whole lot of questions as well. I just don't know what those questions are yet. So the very first thing, if you could help the Going Long family start to get to know you a bit, where is it that you live in the U.S.?
I live near Seattle, just outside of Seattle, about 10 miles outside. The city is Renton. I'm just south of Bellevue. Renton's most famous for a Boeing plant. We build all the 737s in Renton. And it's a great little town. Nice community. Northwest is a wonderful place to be and to live, and so much to do, and glad to make it my home.
All right, fantastic. So out on the left coast of the U.S., up in the Northwest, which is absolutely fantastic in that lovely state. So help us understand as well, John, what's the most positive thing that's happened to you in the last 24 hours?
Last 24 hours. I would have to say I was asked to speak at a local meetup. This meetup has had a long history. I think it's about 22 or 23 years in Seattle, a real estate meetup. It's called Real Estate Association of Puget Sound, and there's a commercial sector of it. And they needed a speaker for last night, and I got to speak to a good group and share a lot of experiences. I'll probably say a lot of the same things now since I've had some good practice, and the group was real appreciative, and it was nice that they had informed questions, and it was clear that they had an interest in what we were talking about, and I could relate to a lot of them. I knew a number of them from prior meetings, and I've been part of this group for a long time, so it was a great experience. Really loved doing it.
All right, fantastic. So you've also set the bar high for me, because that means I have to ask you some informed questions so that the entire Going Long family can learn from that.
I'll help you with that.
All right, perfect. Thank you, John. Thank you so much. I appreciate that. But listen, speaking of which, I have to kind of be very open and transparent with you here. I don't know if you remember when we were talking many years ago, but I like to keep the bar. I like to raise the bar pretty high. And so I set the standard pretty high for myself, and I try to give myself some impossible tasks sometimes. And like the task of trying to explain your entire backstory in 4.5 seconds, it's probably not going to be able to do that. You've impacted way too many lives. You've done way too many things, but I always try. Thing is, the Going Long family, they forgive me conversation after conversation, and hopefully you'll forgive me too. But more importantly, if you can help me as well, help me in that you can actually tell your backstory in your own words, number one, but then also, John, if you could also highlight some of the main decisions that you've made to get to this point in your journey, and then we'll see where you and I take the conversation from there.
Sure, I'd be glad to. You and I did have some good earlier conversations, and that's how we developed a good relationship, and sharing experiences and what we've done so far, where some of our challenges are, and where we really can help each other. And you do what I do is like you start off a conversation with, what do you need? How can I help you? Do I have something that you might not have? Is there a skill or a relationship or something that I can help you with? I didn't completely get that at the beginning, but real estate has been about that. My experiences started, as you mentioned, in the tech world. I've done a lot of things in technology, software developer, managing software teams and consulting, and a number of different roles. And I met a lot of interesting people. I came into real estate about 11 years, 12 years ago, actually probably more like 14 years ago. I started interest prior to the 2008 collapse, and talked to friends, and really wanted to invest with some friends, and it just didn't work out, and I didn't end up getting anything. And then 2008 came, and I was so glad that I was not in the market at that time, and especially had not bought right before the collapse. But I was interested, and soon after that, 2009, 2010, I was looking at real estate and bought my first property on my own, triplex. Just needed to do something, get into the business, and near me in 2010, and closed it in 2011, and bought another one, and I was managing them on my own, and I managed a triplex and a fourplex on my own with the W-2 job for about 3 years. Super difficult having a job, getting the phone calls for problems out at the property, but I learned things. There's a lot of experiences. Like the first triplex, they said, congratulations, fully occupied. And I close the deal, drive over to the property, knock on the doors and say, hey, I'm your new owner. And the first person had a water leak and wanted to sue management. And the second person was there. The third unit was completely empty. And now I'm thinking, well, how do I find a tenant? How do I write a lease? All those things that I was not ready to do. But you figure it out. You know that you're taking step. You don't know all the answers. You're never going to know it before you do it. And that's the first rude awakening. Got into the 3 unit and then found the tenants and made some bad decisions on tenants and some good decisions, and learned a lot along the way. Had the 4 unit and managed those over about 3 years or so. Grew the income, had better tenants, better rent, and sold one of them, bought an 11-plex. Sold the other one, bought a 15. And it's just the magic of growing the equity and the income on a property and being able to move it into some other kind of property, and had those for several years and leveraged up for that. And through all that process, I met people and became connected to networks, and then discovered this whole thing about syndicating, buying a property with other people who are partnering with you, who really want the benefits out of real estate ownership, but may not have the time or experience to go out and do this all on their own. And I learned about syndicating, and I bought my first syndication property. I think it was in 2017, moving into 2018, and had partners, raised funds, owned the property, and all still owning these other properties that were managed by professional property managers. And then moved forward further into syndication. COVID came along, of course, but I did not have another syndicated property until last year. And then found another syndication. I was looking in other places around the country. You mentioned that I've invested in other areas of the country, which is correct. My first properties were in the state of Washington, where I'm from. Those were okay. I mean, they performed well. It was certainly an in-demand area, but a lot of things about my home state made it not the right place for me to invest. And it's not necessarily bad for other people, but it's just not good for me. And so I started looking around to other parts of the country. This first syndication was in South Carolina. I like the Carolinas. I'm actually originally from the East Coast, and so I could relate to a lot of the Carolina markets, North Carolina, South Carolina, even Georgia, Tennessee, some of those places, great markets. I liked them a lot. Tough to get deals, even tough back then, but it's super tough today. And then had that South Carolina property, and then also started looking further inland because prices are such at a premium. There's such demand for those properties, and there was a lot of people moving into these markets that could not find good deals in the coastal markets so much. So I moved inland, more Midwest, started looking around in other Midwest markets, Oklahoma, Arkansas, Kansas, Missouri, Kentucky, those markets. And I found a property in Tulsa, Oklahoma, a 96 unit, and this is about a year ago. Syndicated that as well, and we're still working on it. It actually was a low occupancy property, under 50% occupancy, and so our job was to finish renovations that needed to be done and lease it up. We've since done that, and we're almost to the stabilization point. Things have gone really well with it, and we're happy with the progress, and we'll continue owning it. We'll talk about disposition at some point in the future. Don't really know what our plans are, but that's gone well. That taking it from a low occupancy to where it is today. Also decided last year to sell my remaining property in Washington and then buy another one with the proceeds from those funds, and did a 1031 exchange, sold that property at the end of last year, and bought another property. It was a 15 unit that I sold, and I was able to buy a 40 unit at that in Kansas City area, and that's where I am now. I don't have partners on that, but my next property I will be syndicating. And I think that the crucial thing there is that it is. I won't say that's easy, but any investor needs to know that these opportunities are there to grow equity in a current property and leverage that equity to buy another larger property, something with more income, cash flow, and greater opportunity for appreciation. Those opportunities are absolutely there, and that's the cool thing about the real estate markets that we all like. And so that's where I am today. I still have a couple properties, and I still look in these Midwest markets for more properties, and I do this full time.
Fantastic. So now being able to do this full time, and having started in a position where you were working in software in different industries, but a couple of things that really resonated with me is, if you can maybe give us a sense of how much time were you were you in your W-2 and being able to manage both of those things, because you were very active. Like, you and I have a very similar kind of path, because I was doing something very, very active. I was in a highly demanding job and things like that. And I think a lot of times, John, people were like, well, how can you actually do both? So maybe you could talk to us a little bit about what that timeline kind of looked like.
Yes, it's a good question, and that's really one of the first things that people have to figure out, especially if you're buying into a training or a coaching program. You're putting down a fairly good amount of money, and what I hear over and over again was, well, now that I've spent that money, I'm going to be super motivated to do this, and that's just not the right way to look at it. You need to know that you have the time, that you can figure out how to find the time. And for me, it was I had one advantage. I'm on the West Coast, and my markets are further east. So I'm an early person generally. I'm up really early, and I can make phone calls in the morning before my day job starts. And so I can get an hour, sometimes more than an hour of phone calls in the morning, and then I start my day job, and I work my day job, and then I might have more things to do in the evenings. Typically, my mind shuts down in the evening, and I don't do quality work in the evening.
That makes two of us.
But weekends, and where I met you was at a conference. We fly to another city. I'm taking a day off, or 1 or 2 days off or so, vacation. You got to plan on that, and you're showing up, and you're going to give it your best for that Saturday and Sunday, or Friday and Saturday, whatever it happens to be. Don't slouch for that meeting. It's just like, don't decide in the middle of the afternoon, I'm really tired, I need to go back and take a nap. Don't do that. Take advantage of the whole time that you're there, and because you're going to make a few more connections that'll turn out valuable. And so you spend your time on these weekends meeting people. I like conferences. They're not necessarily for everybody. A lot of folks I talk to say conferences, I can take them or leave them, or they have other ways of meeting people. But a conference is a very, very good pre-qualified set of people to talk to. You're learning from them. You're meeting people who are further advanced than you are. You're meeting people who you might want to partner up with at some point in the future. And yeah. So go ahead.
Sorry, John, you just said a word there, and that I want to make sure that everybody in the Growing Long family heard, because it's something that I don't believe people give enough credence to. You said when you go to these conferences that you have a bunch of pre-qualified people. Can you help break that down so people really understand what you meant by that? Yes. And first of all, if they didn't hear, I just want to make sure that they did hear, because I appreciate you saying that. But I think this is really an important point, because you're talking about doing the work when you're there, but you're doing the work for a reason. You talked about pre-qualified. Can you break that down for us, what you meant?
Yep. Let me go back a little bit. And it is when you decide to syndicate, you are putting together partnerships. You are putting yourself out there that I can buy multifamily property and bring it to close and find investors and then drive management of it. You're part of a team. You're not going to be the only person managing it, but those investors do not manage it. They put their money in, and they're limited partner passive investors. That's by definition what they are. And so they want to be sure they are partnering with somebody. They're putting the money in with somebody who is dedicated to it, is going to stay with it, and has the breadth and experience to do that. And so what we as syndicators are interested in doing is meeting people who we can either partner with or who might want to invest in a deal with us. And that is a lot of what we do. Finding the deals is a lot of what we do, and there's certainly a number of other things too. So I go around. I've gone to local meetups and chambers of commerce and other networking events, and most of us who do syndicating are busy doing those things. However, if I go to a local chamber of commerce, it's filled with people of all kinds of different skills and trades and professions, and they have a lot of different services, and they want to meet people to sell their services. We have just across the board a lot of different people. There might only be a small number of them who are interested in what I'm doing, interested in real estate, thinking that, yes, I've thought about investing in real estate, or maybe I do, and now I'd like to take it to the next step, or maybe I'd like to find somebody who can and help me benefit from all the virtues of multifamily real estate. And there are plenty of them, and but my opportunities in events like that are fairly limited. What I mean by pre-qualified going to a conference is that everybody who shows up at a multifamily conference is not just syndicators. It's how to buy multifamily deals. It's some syndicators and some people who just want to buy them for their own or join others. Everybody there has an interest in multifamily real estate. That's kind of the first criteria. They've all shown that interest by committing the time and energy and money to go to an event like that. That's what pre-qualified are. So when you meet somebody, you and I meet, we're jumping right into a real estate conversation pretty soon. It's not talking about, well, what do you do? Oh, you provide this service or that service, and I'm thinking, maybe I could use it, but not today, or something. What we talk about is relevant to our interests, and I'm listening to you and finding ways that I can help you in your business, and you're doing the same for me, hopefully. And people meet quality people through those events.
Yeah, and I appreciate you really breaking that down, because I think this is one of the things that, like as I mentioned before, we don't give enough credence to. So when you are at making travel, because you talked about, it's really two elements. When you have extracted yourself from the day-to-day, you've decided to invest, number one, your time, because you are going to spend probably 72 to 96 hours between travel, on-site, et cetera, at a minimum, to more than that, right? Number one, you're dedicating your time. So there's a focus behind that. You're also dedicating your financial resources because you have to travel there, whether it's by car, whether it's by train. Just like me, you and I met in Dallas, Texas, and I flew from Barcelona. You flew from Washington, and we go there. We had common interests, common goals, and understanding. And this is one of the things I also want the Going Long family to understand. John talks about, how can I help you? Not what can you do for me, but how can I help you now or potentially in the future? And going in with that giver's mindset, with that understanding that you want to be able to provide value to someone else, and doing that in a time, in a place where you know that you're dedicating your energy and your time to that. So I think it's a really important point, John, and I appreciate you breaking that down to talk about that qualified, because you're there for a purpose and you're dedicating your time and your energy. So appreciate that. Really hope you're enjoying today's conversation. And once again, if you're an accredited investor and you are tired of getting crushed by your W-2 taxes, and you're looking for a new way to gain more control over your freedom to choose, go to firstgencp.com/invest. Once again, that's firstgencp.com/invest. Now let's get back to today's conversation. The other thing is, and this is just something that I am always curious about. Now, you were doing things very well in Washington. Things were working out for you, even though you were from the East Coast, and you still got started. And eventually you decided to, well, head somewhere else. And you and I both know that most of the time when you are getting involved in the game of real estate or investing in real assets, the idea is that you must invest in your backyard because the books say you have to be a good landlord, you have to find out this, you have to find out that. I don't discard that, but I don't believe that's the only way. And every single day, and stories like yours help to reinforce the proof point that you don't have to live in the same place where you invest, whether it's actively or passively. You just gave us a great story where you're in Washington and you just 1031 exchanged out of a property. You have more doors in the state of Missouri, right? Or Kansas. Sorry, I can't remember. But I know you said Kansas City, but I can't remember what side it was on. But the idea is that, to me, that's very contrarian, John, because most people don't want to do that. But because everybody here, once again, is qualified because we want to find out more about long distance investing, help us understand, what was it that gave you the fortitude to say, look, I live in Washington, but I'm going to head to the Southeast to start to make some more investments? Because it's so contrarian.
Yes, good question. It starts even earlier on. My experiences buying my first two properties, they were half an hour down the road. I was managing them. I could jump in my car and go down and fix things or talk to somebody or interview a prospective tenant. And I did that. It was time consuming. When I sold them, the properties that I bought were in another part of my state, Eastern Washington, 2-3 hours away. I couldn't get in my car and just pop over there very easily, and I didn't want to have to. Plus, I had professional property managers. So my job was to find the right property managers and talk to them on a regular basis and make sure that I knew what was going on with them. And after a little while, I got that to work. And when I realized my property doesn't need me to show up and touch it once a week or once a month or anything like that. I did go every few months to see the property, but it wasn't required, just to kind of verify a few things. At that point, I knew I could invest anywhere. I get to know the market, learning about a market. I mean, there's several aspects to it. And somebody who says, I want to invest where I can drive to the property and touch the property, there's some merit to that. You know your backyard, you know the neighborhoods, you know all the little submarkets around your town, or presumably you do, or you can find out real quickly, and you develop an understanding, and that gives you a comfort level that that you don't want to walk away from. What I would say is that you can learn the same things about your other markets, and really this is imperative. If you choose another market, another part of the country, it's incumbent upon you to learn about that market.
Yeah.
Not so much like you live there, but you do need to know where the submarkets are, which submarkets are thriving around a given metro area, and where the paths to progress are, where the highways are. You need to have an understanding of, well, don't drive into that neighborhood at nighttime because it's dangerous. It's those kinds of things you develop a feel for, plus all the normal demographic metrics that you want to track. You want to look up population growth and job growth and see which companies are moving in and where are they moving, which part of the town are they moving. Those are all things you can do online and do with other people, to do with your broker. And there's no reason you can't get just as comfortable with an out-of-town market somewhere across the country as you are with your own market. And you have to have a purpose to it also. You have to know that you can do better financially. You can find properties that pay better cash flow, where there's more investor demand, where people are actually moving. I mean, my area in Seattle, even though it's a northern tier, there are a lot of tech companies moving to my area, and the job opportunities are good. And there's demand. A lot of aspects about my area that I don't like, but things like that you need to be aware of in these other markets that make them attractive to invest in. And I mean, you can do Google Street Views. You can. I mean, what I've done in some cases, I've gone onto Craigslist and put a little ad out for a photographer, somebody to walk by a property, take their iPhone out, take pictures, and then upload them to me, and I pay them a few bucks, and that's a lot of great real-time information that's not pre-packaged by the broker. Yeah. you can learn a lot about that area in the property.
Yeah, so it's interesting. So when you have this, and once again, I don't discard and say that you can't, but I just don't believe it's the only way. And
No, not at all.
having your story, which is you started that way, but then you also had this opportunity to invest 3 hours away. And so I'm sure what it sounds like is a very similar realization that I had. I am someone who loves to be able to have control. And so I can only imagine if I would have purchased my very first property, like literally down the street, I would have probably been there every day, all day, trying to do everything, fixing stuff.
Yes.
And so when the property was literally 8,000 kilometers or however many thousands of miles away from where I live here in Barcelona, I couldn't focus on the property, John. I could only focus on the process and fixing and making the process better. And by making the process better and putting systems in place, that's what allows you then to be able to provide an optimal service. And then when you make sure that you have the right team in place, then it makes it even better because they're closer. They can see what's happening on a daily basis, et cetera, et cetera, et cetera. So I appreciate you sharing that evolution with us. And one of the other things that I did want to talk about. So talk to us a little bit about what it is that you're doing today, because I did talk about some of the things that you're doing, syndication, where you're focused on. Who are the people that you are helping and working with today?
Who I work with mostly are brokers today. What I've been strong at is sourcing deals, is finding the deals and then underwriting them. I have like I mentioned, a good tech background. I'm comfortable with numbers and with the software tools, and I can underwrite pretty effectively. I've got a well-developed underwriting spreadsheet that takes a lot of different, I model a lot of different scenarios based on equity splits and loan products and what investors are interested in, and I talk to a lot of brokers. My time is spent looking for deals at this point. I'm trying to get deeper conversations with brokers, and so I've had a number of good brokers in my network for a while. I've spent a lot of time developing those relationships. For somebody starting off, I think that's a strong recommendation, is to develop your broker network. Find brokers who are working for you. But
John, could you maybe give us some insight into that in terms of because I know that this happens to be one of your superpowers. Maybe you could talk to us about what it is that you do that allows you to build those relationships in a way that is beneficial for both parties or all parties involved.
Yes. To build a relationship with a broker, you've got to have a connection. It's like any kind of conference that you're at, you're looking for a connection with them. And it might have to do with their area, something about the area that they live in, or it might be a sports team or any other mutual interests. I enjoy fishing, and so talk about fishing with different people, and I've had some great stories, and you share updates about yourself. Like if I'm talking to a broker in Oklahoma and I get a property under contract in Kansas City, then I'm going to want to let them know. Typically, it is not something all syndicators do, but it takes me offline for a little while just because I'm busy trying to close on another deal, and I don't want to blow them off. I don't want them to feel like I'm not interested. I just kind of let them know those things. But it's sharing things about yourself, being clear with them about what you're looking for, being responsive to them when they go out and look for properties. They heard about an unlisted property, or maybe they're even pulling something off their local MLS for you. But definitely, if they have an off-market property that they themselves got and they pass it on to you, you have to respond to them, even if you're not interested. It helps them qualify what you're looking for, and so that they can help you better. You've got to respond to them. I've had brokers. I've called brokers maybe after a few months have gone by and say, "Hey, I'm still looking, or I'm interested," and have them tell me that they sent me an opportunity 6 months ago and I didn't respond to it. And I hear that and I think, man, I really screwed up. That was my mistake. I should have responded, and I try to respond to all of them. If there's a relationship there that I wanted, that they're doing some work for me, then I at least owe them the respect of giving them feedback on it. build after that. Yes.
Yeah. And so what I love about that, right, is being able to recognize that, hey, listen, this is about building a relationship. It is about building that professional relationship, and it's about being able to communicate. It's about being clear in terms of what it is that when you decide to go into a specific area and you want to develop relationships and make purchases, exactly what it is that the value that you're able to bring to the other person, the broker in this case. And one of the ways that you have mentioned that's helped you to be an effective relationship builder is making sure that you're also timely and concrete with your responses. Because once again, if it's the type of an opportunity that you want to bring into your portfolio and go into contract, then you let them know and why. And also, if you don't want to go, it doesn't meet your criteria for X, Y, Z. That's something that also helps you build the relationship because you're making things clearer for the broker that you're building a relationship with. Is that accurate, John? Or I feel like you want to add something else to that.
No, that's straight on. That's exactly what it is. They need to know and believe you. And there's a level of credibility that needs to go along with this as well. And yes, I bought a number of multifamily properties and I can deliver the credibility today, but that's not always been the case. Is early on, if you only own like a duplex or something like that, or maybe a few single family homes, and you want to buy something bigger in multifamily, you've got to come up with a way to convince them that you're credible. And there are several ways of doing that. Everybody has skills that they bring into this. And even if you've not done a lot of real estate, you've done other things in your life. You have some accomplishments, and you should be clear about mentioning them. That you've managed other projects, you've managed a budget, you've worked with other people on construction or rehab or whatever it is you can bring to the table. You have a lot of deep finance background or accountant or whatever your skill or trade is. You bring something in, and your broker needs to know that. Your broker is thinking, especially in today's market, there are a lot of buyers out there, and the broker doesn't want to waste their time on somebody who can't close the deal, can't bring money in, and is not going to qualify for the loan or whatever. And the broker doesn't want to spend any more time on somebody like that can't do that than they have to. They're going to want to get you off the phone and probably not return your calls. So you have to build your credibility and talking with them, even finding a partner. If you've got a partner who you think will go into a deal with you, who has a certain amount of real estate experience, then that's your experience. You say, we did this and we did that, and we bought all these other properties and we did all these other things, even though it might have been more to your partner. That's something you have to communicate and to build your credibility with that broker.
All right. Well, I appreciate you sharing those golden nuggets with us. I can't believe we have to get to the going long final three, John. It's already time to get to the going long final three. But here's the thing. I don't ask any of our special guests, and today you're our special guest. I don't ask the question unless you tell me that you're ready. So are you ready?
I'm ready, Billy.
I knew you would be ready. I knew you'd be ready. So here we go, John. So we started with you over in the wonderful state of Washington. I'd like to bring it back to this side of the pond. Now, although I'm originally from Columbus, Ohio, I now consider that this side of the pond is my adopted home side of the pond now. And so I would love for you to share with me and the Going Long family, what is your favorite European city that you've either visited or is still on your bucket list to visit?
I haven't visited too many. I've been to Great Britain and a long time ago, and I've been to essentially made a trip from Edinburgh to London, and on the road. My favorite city has to be Edinburgh. I liked it a lot, but it's not. There are a lot of other cities on my bucket list, my agenda to go to, including Barcelona.
Awesome. Well, you got a buddy here, so let me know when you're ready.
Let us do that. Yes, and possibly Italy coming up in the next year or so. Thinking about places to go, but my heritage is from Norway, and so I have relatives there. So Norway is on the list too. I see lots of gorgeous pictures of Norway and want to see it for a variety of reasons.
Yeah, it's fantastic. So also I've got really good friends and family up that way. So let me know. Let me know. But we're going to go with Edinburgh today. So which is fantastic. And then question number 2, John, it really has a lot to do with the good fortune that I've had of meeting lots of very successful people. And I consider you someone who's very successful. And it's part of your being able to share with us. And hopefully you've also noticed one of the things that successful people, one of the reasons that they tend to be very successful, and like most people, is that when they have a plan or they want to do something, they put the plan into place and they execute it. They get everything right the first time, which then allows them to continue to accept. I think I just messed that up. No, don't worry, John. Don't worry. It's a joke. Everybody check out the video version. John was like very nervous. He was worried about it. He was very worried about it. Thank you. No. You're like, what? Hang on a second. Perfect. Every time. No, it's just a joke. It's just a joke. So here's the thing. John, of course, nobody gets things right perfectly. No one ever gets anything right perfectly the first time, much less people that are very successful. The reality is people that are successful, John, as you know very well, make like 20 to 50 times more mistakes than anybody else all the time. But they do one thing very differently. And this is no joke. This is absolutely no joke. This is serious. And the thing is, every single time the successful person makes a mistake that is relevant, without a doubt, every time they stop, they learn from the mistake. And then right afterwards, John, they put different strategies, tactics, and actions in place to minimize the probability of that exact same thing happening again. So I don't want you to think about really the mistake or the learning opportunity or however you want to call it. I really would like for you to think about the one lesson that you learned, and you know that the Going Long family needs to hear that lesson today. What's that one lesson we need to learn from you today?
The main lesson is it's kind of a higher level lesson, but it's about selecting and managing your property manager, how to manage the manager, choosing right and working with them and setting up metrics for holding them accountable. Because I've made that mistake too many times. I've had some bad managers and had to replace them. And I've got good managers now, very happy with them, but it didn't come easy. And but fortunately, the mistakes were on smaller properties. It's good that I started with a smaller property, and I could learn and grow from the mistakes. But the property managers, they're not always having your best interests in place. They're not always keeping track of things like how much you're spending in repairing that unit. How many times have you gone back to that one unit to do various pieces of work, and seeing costs broken down by unit, which they may or may not be even tracking. I track it, and I'm tracking it much better now than I was earlier. And I'm looking at that thing. Why have we spent $7,000? There's not even a big renovation going on there. And the reason might not be a very good one. It might be that somebody's gone back and fixed work that they themselves did earlier and getting charged again for that kind of thing. But those kinds of things, betting your property managers, coming up with criteria for a good property manager, and talking to a lot of them, talking to the references, picking the good one, and then setting metrics in place from the very start, including regular conversations with them, especially when you're starting off, once a week, once every 2 weeks, wherever it happens to be, and asking for certain data provided by them that tells you, is the marketing working? Are they getting work orders fixed? Are they finding the prospective tenants? Or, an interested tenant is at various stages. They submitted an application. They got an application approved. They're pre-leased. They put money down, and they're ready to move in at all those different stages. How many are each one of those stages? And all those kinds of things.
So being able to effectively manage your manager and think about the different things that they are responsible for, and making sure that you have the different systems in place. It comes back to being able to make systems. So fantastic. And then the very last question of the Going Long Final 3, help us understand how you can help to fill our heads with knowledge and share that one book recommendation that you have with us. What's the one book you want to recommend to us?
The one book is called Living with a SEAL. And it is a book about a Navy SEAL. And the author, I think, is Jesse Itzler, if I'm pronouncing that right.
Okay.
There's a lot of profanity and vulgarity in the book, but it's super motivating and inspirational. It's about a Navy SEAL and how a Navy SEAL worked with somebody who was athletic, but really wanted to take their athletic game to another level. And all the things this Navy SEAL did with that person day in and day out, all day long, forcing them to do pull-ups and forcing them to do push-ups and just the mindset that this guy had, that he was able to share with somebody else who was completely not a Navy SEAL person. And
phenomenal. So living with the SEAL, and it sounds like accountability is going to be a big part of that book. But you know what, John, I cannot believe that we have gone through our entire time for the conversation already. I mean, like, we're just in the very beginning. Yeah. I mean, this has been awesome. Like, you've telling us about your story in the software and in the software development side and in different industries and aerospace and being an analyst, and then being able to also go towards your own dreams and being able to get that triplex and then the quadplex, and then doing that in your backyard, and then going 2-3 hours away, and you can't go down and check on the property anymore. And then that helped you to realize, like, hey, listen, if I can do 2 or 3 hours away, well, why not do 2 or 3 hours in a plane, or 4 or 5 hours, or whatever the case may be? And so it's allowed you to not only continue to grow, as you talked about before, you've made improvements to your process, continuing to find your specific niche, which is really on the underwriting part, and being able to build broker relationships, and being able to do that so that you continue to add value to others, to investors, as you have that mindset, which is really a service mindset, and how you can add values to other first. That's come through over and over and over. And I know that the entire Going Long family is like, yeah, Billy, just get to the question, man. Just help us understand. How can we find out more about John, what he's doing, what they're doing at Cardinal Oak Investments, et cetera? So, John, help us understand, what's the best way for the Going Long family to get in touch with you and find out more about what you're doing?
The easiest way is through email. You can email me at John, John, at cardinaloak.com. cardinaloak.com. You can we set up time to talk. Glad to share what I have and help other folks in their investing journey as well.
All right, that's perfect. John at cardinaloak.com. Everybody, go ahead, send him an email. He lets you know, and have that conversation with John. He's definitely a person who's here to help you grow, to help you move forward to your goals. And John, I just want to say thank you very much for deciding to invest your time with me and the entire Going Long family today. Thank you so much.
Thank you for inviting me, Billy. I wish you the best, and I hope to talk again soon, and keep track of your progress too.
All right. Fantastic. Appreciate it. And John, listen, if you can give me like literally 15 seconds, I just want to say goodbye to the Going Long family, and then I'll get you out of here. So listen, everybody, take today's conversation with John, literally download the conversation, share it with family, share it with friends. That way you can not just listen to it, but take the concepts that he shared with you, being able to put them into action. Whether you're in a really busy corporate job, or you're just getting started, or you want to take your game to the next level, he's even made himself available. So send him that email that he talked to you about at john@cardinaloak.com. While you're doing that, I'm going to be right here preparing the next conversation. So until then, go out and make it a great day. And thank you very much. Once again, today's conversation was sponsored by First Generation Capital Partners. If you want to find out more, go to firstgencp.com/invest.